Then what are the cases of income escaping assessment? So the words used are income escaping assessment. What are the cases? First, where no return of income has been filed by the assessee and no assessment has been made, but the income exceeds the maximum amount not chargeable to tax. For an individual, this is the basic exemption. For other entities like companies, firms and all that, it is from the first rupee. They had income, they had to file the return of income. Where a return of income has been furnished but no assessment has been made and the assessee has understated the income or claimed excessive loss, deduction, allowance or relief. So although you filed return, you have claimed something higher than what you were entitled to, higher expenditure, higher loss, etc. Where an assessment has been made but income has been under-assessed, income has been subject to excessive relief, extra 10AA, extra ETC, etc. Excessive loss, depreciation or any other allowance has been allowed to the assessee. The income has been assessed at a lower rate. Let's say for a foreign company, domestic company rate has been applied. Possible. Where a person is found to have any asset including financial interest in any entity located outside India. This has been added since the last few years. This is again Modi's promise of bringing back the black money. This is actually part of that whole deal. So we had like a deal, right? 44 AD, demonetization, all that. So this was also added at that time. So if a person is found to have any asset outside India and is not disclosed it, it is directly considered as income escaping assessment. That's a reason to believe. That means the assessing officer can just say that asset is located outside India. That is sufficient reason. He need not prove that the assessee had used this money for it, that money for it. He need not go into the source of the fund. Asset outside India itself is a proof. Where the assessee was required to furnish a report of transfer pricing and did not do so. Again, these cases are automatic. The assessing officer does not have to apply his mind further. And the last one, when any info under 133C has been received. So 133C is an information section which the income tax authorities can use to collect information. So we will be seeing this section later. So if any officer authorized under that section has collected some info and he's passed it on to this assessing officer, this assessing officer need not apply his mind further. That information is received itself is a reason to believe. So assessee cannot say you did not investigate, you did not ask me anything, you have received info. Is that allowed? Yes. That itself is a reason to believe. We will see an example for 133C shortly. What are the summary of the scenarios here? So there could be a chance that the assessment is complete or the assessment is not completed basically. If the assessment is complete, the income has been assessed but under assessed or assessed at a lower rate or excessive relief or excessive loss, deduction or allowance. This is if the assessment has been completed. If the assessment has not been completed, there could be two possibilities. Return is furnished and return is not furnished. If return is furnished, then the income has been understated, similar to the previous case, or excessive loss, deduction, depreciation, allowance, etc. has been considered. Very similar to the assessment completed. No return furnished. Income exceeds the maximum amount chargeable to tax. So his income is, let's say, 3 lakh. He has not filed the return individual. It could be picked up under 147. Other scenarios, asset outside India, there is no transfer pricing report but he was supposed to furnish it, or information has been received from a prescribed authority under section 133C. These are the reasons to believe. Any of these could be a valid basis for reopening under 147. Clear with the concept of 147? So the key ingredients of 147 is, one of the key ingredients is reason to believe that income has escaped assessment. So if they ask you 147 question, these key terms must be used. You cannot use your own terms here. Reason to believe cannot be modified by any other English word, because that is the core of the section. Income escaping assessment again cannot be changed. Other parts, how you write, the framing of sentences can be modified, but these key terms do not change. What are the other reasons to believe? A later Supreme Court judgment disallowing an expense or taxing a receipt, but which applies to the SSE obviously. SSE has gone on appeal, the Supreme Court has ruled. Now the AO can be directed to open it under 147 and pass the assessment order. Retrospective amendment in law, disallowing an expense or taxing a receipt, reason to believe. But remember, you cannot go back more than the prescribed time period. So you have to keep the time periods in mind. So the amendment could be retrospective from 60 years or 70 years, but you cannot go back during independence and say Jawaharlal Nehru asked me to do this. No, not possible. You have to go back only the last 4, 6 or 16 years. Evidence in possession of the AO that SSE has understated the income. Now there is a income tax, you can actually disclose things to them, and there is a reward scheme. So if you have disclosed something to the assessing officer and you've got a reward, the AO can actually use that information and pick up the case of the SSE. Evidence in possession of the AO that the SSE has claimed excessive loss, relief, deductions, etc. Mistake apparent from records, but remember 154 is always possible, so he need not resort to 147, but he can if he want, because 154 has a 4-year time limit. So 154, if time limit is over, you could possibly go into 147, because 147 gives you a 6-year time limit. So if the AO wants, he can use this, otherwise he can always use 154, the same power is there. Information received under 133C, this can be a direct reason to believe. Some key ingredients which have been upheld, there should be an application of mind by the AO. Mere change of opinion is not considered as a reason to believe. For example, let's say there was a particular receipt and that receipt was claimed by the SSE as a capital receipt. Assessing officer agreed with him and closed the assessment. Then 2 years later, the AO suddenly he gets a dream saying it is revenue receipt. Now you have to tax it. He gets up, sends a 148 notice to open under 147 saying, I now believe that the receipt which was earlier accepted by me as capital receipt is a revenue receipt. Is that a reason to believe? No, that is a mere change of opinion. There must be some new facts which must change that opinion, otherwise you cannot simply change your opinion and open under 147. So if an expense was allowed, now AO cannot open saying sorry, it is to be disallowed. If AO had accepted the view, if AO had missed it, then it's possible. If AO had specifically seen it, there is proof that he had actually commented on it and allowed it, and now he cannot for change of opinion open under 147. The reason should not be based on rumor or conjecture. That means there must be some facts before the AO. So he's got an anonymous tip off, can't use that to start 147. But remember, an anonymous tip, he can always do survey, gather information and then start doing. But the anonymous tip itself cannot be a basis for starting. So the reason to believe cannot be the anonymous tip. But remember, 133C is okay. That is collected by a prescribed income tax authority. 133C, if he gets a tip from another AO, possible. and there must be a relevant and bona fide belief. In other words, since this is revenue beneficial, the AO must be sure, or he must believe, that there is income escaping assessment, because always the assessee has a right to appeal against this, first of all. Secondly, if the AO is opening cases without substantiating it, he can approach the High Court under Article 226. So that option is always available to the assessee. So AO cannot like get away by opening without having a valid reason to believe. You cannot open and then start investigating. There must be some proof already to start the assessment. This is slightly different from 143. 143, he need not have specific proof. 144, he need not have specific proof. 143 can be started randomly as well. 144 can be started if notices are not complied with, or information or documents are not provided. He need not have reason to believe that there is any income escaping assessment. But 147, that is the key ingredient. Information received under 133C. Messrs. XY Limited has shown in its P&L account that it has made purchases of 100 lakhs. In other words, they have claimed a Section 37 deduction. The prescribed IT authority issues a notice under Section 133C to Messrs. AB Limited to verify. So if you notice, to the seller, whether it has made a sale of 100 lakh to XY Limited. AB Limited denies it, saying I've never made the sale. Now this IT officer passes on this information to the AO of XY Limited. The AO of XY Limited can open under 147, saying you have claimed a purchase that you have never made. Now XY Limited cannot claim that you have not actually applied your mind. You are relying on someone else's mind. No, because 133 has been declared as a reason to believe. So 133C can be done here as a basis. And the prescribed authority is Principal Director General, Principal Director and Director. The word principal is added. Just remember Director General and Director and add the principal to it. This was done a few years back. All the designations had a principal. See, commissioner became principal commissioner. So just add principal to every designation. So it's actually 2 designations but converted to 4. Here. So this section can be used by them to find out information to authorize a search. So the Director of Income Tax can use 133C to authorize search in the future against that assessee. But in that quest, if he finds something relating to another assessee, he can pass it on, and that other assessing officer can go ahead with the assessment using this data. Notice under 148. So issue of notice, this is a very important concept, because if the notice itself is not valid, then obviously the assessment will fail. Before making an assessment or a reassessment, the assessing officer shall serve on the assessee a notice requiring him to furnish a return of income within the time specified. So 148 mandates the AO to ask the assessee to file a return of income. Remember, once he files, the 143(2) time limit automatically gets extended. So 143(2) can be sent within 6 months from the end of the financial year in which the return is filed. So 4 years later, 148 notice comes to the assessee, and the assessee files a return of income under 148. That 6 months gets automatically extended. But the assessing officer need not go to 143(3) to do the assessment. He can as well do the assessment in 147 itself. But it's an option, remember. So the assessing officer gets a shot again at 143(3) should he need it. The assessing officer shall, before issuing the notice, record his reasons. He need not share it right now, but he has to record it. That means the date of record must be before he sends the notice. He can't send the notice and then document why he sent the notice. He has to document why he sent the notice and then you send the notice. The AO is duty bound to supply to the SSE the reasons recorded by him for the issue of notice after the SSE has filed the ROI. If the assessing officer gives him the reasons along with the notice only, what is the problem with that? The SSE will file the return including that income, right? So then it could lead to a situation where the SSE himself is declaring. So the reason why the reasons are not given to him is SSE should not know what the assessing officer has at that point in time. So it is in a way testing the SSE. So assessing officer already knows something. Okay. Let's say for example, the assessing officer knows that there is a Mangalore business of the SSE which he has not disclosed. Now, if in the notice itself he says, I am opening this case because you have not disclosed the Mangalore business income, SSE will file a return saying this is the Mangalore business income. Let's say assessing officer does not know of another business. There is also a Pune business. Now the SSE will be like, okay, assessing officer does not know about the Pune business. Let me file the return only with the Mangalore business. So assessing officer will reveal what he knows before the return has been filed. If he does not reveal, what will happen? SSE will be guessing what the assessing officer knows. So he may choose to declare both those incomes in the return. So this can be used as a basis to start the Pune business taxation as well. So it is easier for the assessing officer to get info without revealing why he started the assessment. But remember, the SSE can always challenge it at a later point in time. It's not that if the reasons fail, the assessing officer can continue with it. He need not share the reasons before the ROI is filed. And he may be required to file the ROI under 148 even though 139.1, 139.4, 139.5 was filed by him in the ordinary course. Return filed under 148 cannot be revised because revised return, remember, applies only to 139.1 or 139.4. So 148 cannot be revised. So whatever you are declaring is going to be final. Reasons are supplied on the request of the assessee. If reasons are not supplied once the assessee requests, AO cannot proceed with the assessment because this is violating the right of the assessee to know, because this section is purely going to benefit the revenue. So there is a safeguard inbuilt in this section. If the reasons are invalid or the fact that the assessing officer does not disclose, then the assessee can file a writ petition in High Court and High Court will quash the 147 assessment. So remember, this writ petition in High Court is always open to the assessee in any case. Always. In any matter, the Income Tax Act cannot take away this right of appeal because this is not under the Income Tax Act. This is under the Constitution. So for example, AAR ruling is actually final. Settlement Commission ruling is actually final. But you can always approach the High Court using a writ petition if there is some infringement of your right, if data is not provided to you, the assessing officer is on an investigation spree without actually listening to you. If you feel these things are happening to you, you can always approach the High Court using a writ petition. There are some time limits that you should keep in mind because 147 cannot be started whenever the assessing officer wants. There are inbuilt time limits. So 143.3 also has a time limit, dual time limit it has. Notice within 6 months from the end of the FY in which the return is filed, and 18 months from the end of the AY, the assessment must be completed. 144 does not have a time limit to start, but it has a time limit of 18 months from the AY to end the assessment. 147 has a time limit to pick up the case itself. So the case has to be picked up within this time limit. That means a notice has to be issued within these time limits. So what is the time limit for passing the order? The time limit is 9 months from the end of the FY in which the notice under 148 was served. Can get extended by 12 months if there is a transfer pricing case. This is for passing the order, not for issuing the notice. For issuing the notice, remember this is for issue. No notice shall be issued. That means it can be served after this time. It cannot be issued after this time. 143(2) notice should be served within 6 months. 148 notice should be issued within these time periods. Up to 4 years, it can be issued to the assessee. So whichever year you're trying to pick up, add 4 years from the end of the AY. The date that you get will be the last date of picking it up. For example, if you're trying to pick it up for AY 14-15, 31/3/15 plus 4 years, the last date is 31/3/19. But remember, this is not the ultimate thing. There are other limits also that you should consider. But up to 4 years, there is no income threshold. That means any amount of income escaping assessment will be okay. Even if it is 10,000 rupees, no issues. There is no income threshold, minimum income threshold. If you want to pick up more than 4 years, but up to 6 years, you can, provided the income escaping assessment amounts to 1 lakh or more. That means this due date can be extended to 31/3/21. But remember, if you want to go up to 31/3/21, that means if you look at it backward, you're going more than 4. Suppose you issue a notice on 31/3/21, you're going more than 4 years. So for AY 14-15, the income escaping assessment should be 1 lakh or more. So you can get up to 6 years, but you should keep in mind that the income escaping assessment should be more than equal to 1 lakh. Not too much, 1 lakh or more income, not tax. So if you have not disclosed 2 lakh, done. If you have not disclosed 5 lakh, done. If you have not disclosed 50,000, after 4 years have expired, you ideally cannot pick it up under this section. But remember, this is for the issue of the notice. This is not for the assessment. Assessment order can be passed within 9 months from the end of the FY in which the notice was served. This was added, the point C was added recently again in India's fight against corruption and black money. 4 years up to 16 years have elapsed from the end of the relevant assessment year unless the income in relation to any asset including financial interest in any entity located outside India chargeable to tax has escaped assessment. That means you can go up to 16 years provided the income escaping assessment relates to any asset including any financial interest in any entity located outside India. So if you, let's say, have a house in Europe which you had bought in 2006, which you have not disclosed, 16 years is still there, remember. So this can go and tax that. Clear? So the extra time limit is available to the assessing officer only in this one scenario. If you don't have a foreign asset, then practically the time limit is 6 years. There is no 16. Yes, there is no income threshold for this. You can always go back 16 years without an income threshold. So 4 years, no income threshold. More than 4 years, income threshold is there. Up to 6 years, 1 lakh or more. But if it is in relation to a foreign asset, no need to check that also. Assessing officer finds that the assessee had purchased a bungalow in Switzerland on 1/1/2002 for 10 crore rupees. The source of the 10 crore is not explained by the assessee. The bungalow is let out to a tenant from 1/4/2002. Now what is your analysis? Can the assessing officer give a notice and tax this amount of 10 crores as income escaping assessment? How do you calculate the last date? This is asset located outside India, right? You can do it up to 16. So how do you judge that? So the PY is 1 2, AY is 2 3. So the last date is 31/3/03 plus 16. So up to 31/3/19, the AO can issue the notice. Issue, remember, not serve. Issue. This is in relation to the 10 crore. Now the let out income is also income escaping assessment. For each year, 16 years is available. Remember, he has to send for each year. So 2/3 PY is still open for him to send. 3/4 PY he can send. Obviously 4 5 5 6 6 7 he can keep sending. Yes, agreed. If the residential status is NR, then why will you pay tax in India? So it's not income escaping assessment, right? The income should be chargeable to tax. So this is assuming that the assessee has to pay tax on this income. Because that itself will fail, then how will you open 147? That cannot happen. It's not that just because you have an asset, you can issue a notice, right? The asset should lead to income. And for each year's rental income, 16 years is available. Practically for, let's say, 16/17's income, you have 16/17 PY, 17/18 AY, 31/3/18 plus 16 years, 31/3/34 he can issue notice. But if he finds it out now, he'll issue for each year. Does he have to send one notice or 16 notices? 16. It's not a block. Each year one notice is needed. He cannot send one notice saying all 16 years I will charge the tax. He has to send for each year. Got it? And again, if there is income escaping assessment, in some year, for example, the house is sold. Now he cannot send a notice for that year. That year he can send. After that year, he cannot send any notice because the asset was not located outside India. Then you have to check whether it falls in 4 or 6. So notice can be sent only if there's a asset outside India. The day it is sold, that clause ends. Then you go back to 4 or 6 and you check. For example, if the assessee has sold the asset on 31/3/8, 2008, that is the last year, the notice can be sent for this, and 6 years has expired. Yes, before that you can send. When he was holding the asset, you can send. But the day he sells it, that period will end. After that, you go back to your original 4 or 6 years. If that has expired, then practically the AO cannot do anything. But remember, search. If it's an asset located in India, you can still use search sections. Asset located outside India, difficult. Read this case. The return was filed for AY 1112. Read. Guys, then you can discuss the Income Tax Act. First, let's discuss the case. First, tell me what is the last date. The last date for issuing the notice. Depending on 4 or 6, can take the benefit of doubt and go up to 6 years. You don't know the income escaping. Assuming that income escaping assessment is greater than equal to 1 lakh. It's not such a high amount. So we could go ahead and write that assumption in this case. So if you assume that, then up to 31/3/18 could issue. The question is this considered as issued or not? So has the assessing officer issued it or not? If you say that he has issued it, then the notice is valid. If you say that he is not issued it, then the notice is invalid. Could be, depending on the date it was actually issued. Question is, what is the date of issue in this scenario? See, this is the date of service. 8th April is the date on which the notice is served. The question is it 7th April or is it 31st March? So the AO had made the letter, kept it ready. Okay, so is that issue, or he has to do something to go ahead with the issue? It was held that mere signing of notice cannot tantamount to issuance of notice. The day on which you give it to the proper officer to go and deliver the notice, that is the date of the issue.